Okay. This should work. I should have done everything correctly. Hello. I see a hello. That's good. Let's put that on. I know we messed for like 20 minutes with stuff at the beginning of stream, but I feel like I'm prepared and everyone should hear me. And if someone can confirm, that would be fantastic. If there's anyone here. New haircut. All right. I think that's a good sign. I'm just going to tweet out while that we are live. And then I'm going to sneak into here and do that. Okay. Video and sounds work. Perfect. That's all I was waiting for. Okay. Okay. Perfect. Done. Everything's good to go. If anyone is new here, I'm going to try the camera may be fixed. I don't know. It may just topple over. But if anyone's new here, essentially what I do each and every weekend, we just kind of hop on here, do my entire scanning routine for stocks and bonds and crypto. Bonds, I don't trade bonds. Forex, crypto, and equities. We're going to go through the entire markets as a whole, look at kind of everything that's going on grand, and then we narrow into individual sectors, and then we narrow into actual individual names. So at that last part, when I go through individual names, if there's anything that you want me to look at, that will be the time to type it in chat. And as always, I do this live because I can do it live and I can chat with you guys if you got anything you want me to look at, or questions about trading or anything like that. I love to go over that. Links in the description below for my website, and also all of the tools you'll see me use today. They're all going to be affiliate links, just full disclosure. But if you're interested in kind of what you're going to see is me do all this analysis in the market, what Statsedge Pro is basically I do this every single night, and I put it into a nice, neat little blog form, send that off. You also get access to my scans. You get access to live Q&As, member-only live Q&As with me, access to my watch list for what I'm watching every night and levels of interest. Again, it's not a signal list because I don't really believe in signal services. So it will be stocks more or less that I'm interested in that you should trade with your own plan. So without further ado, let's just get right into it. I need to do the sidebar, and we just need to make that a wide one. There we go. So then I got to place, oh, no. Try again. Sidebar. Wide. I just got to add something. Whatever. Cool. Okay. So let's start off like we do every single time with Bitcoin. The reason I do this is, again, this is kind of my proxy for what I think will happen to the rest of the overall crypto market, right? Bitcoin for me is kind of the bellwether, right? Everything's going to move with this. And really, there's not too much to be super excited about, right? We failed at this 30,000 right here for the longest time. We were going in this area for months and months and months. And for months and months and months, I was saying, okay, if this thing ever lets go, then we're kind of up shit creek, right? So we broke. And we broke pretty substantially, and that's when the crash is. So for me, what I'm doing is I'm just saying, okay, as long as we're kind of inside under this range and we haven't put in a lower high, then I'm not really interested in what's going on. So honestly, to me, this just kind of looks like a bear flag, right? We've got the whole bear flag stuff going on here. Until proven otherwise, right? I wouldn't be one that's doing the bounce. The other thing to notice as we're selling, the smallness, I guess, for lack of a better term, of the candles, right? We're getting very, very small in through here. So if we break down, then I think there's no reason to think that we're not going to just continue kind of getting hammered, right? And you'll always just see me write. You'll always see me write some notes and stuff because all of these get uploaded to Statsedge Pro every night, just so people kind of know what's going on. Oops. The actual trading room, 1 second here, is asking me about the live stream. Somebody's not on my email list. Yeah, so this Bitcoin, it's just not, it's not bullish to me. Now, I'm not one that likes to go in and with, saying history repeats and stuff, but we have to remember how long the last bear markets took to correct, right? For example, let's go into a weekly chart on Bitcoin and let's go way back here because we've been here before, right? So there was the 2018 bubble, and then to retake those highs, so this December 10th, 2017, right? So the end of 2017. So for us to get back there is December 2020. So we had 3 years there. Before then, we can even just use this, I guess, but January 2014 and then January 2017. So historically, anyway, these bear markets take 3 years to recover. So if it's going to end up being like that, then I'm not going to really be super pumped to take some in here. You can see on the weekly chart, I have this area highlighted because I figure, right, it's between this high right here and this high right here. So between these highs, I think is where we're going to have to hold on, between there and there. If we lose that, then, we've got to start looking at kind of the lows here around 2000. So I wouldn't be shocked if Bitcoin kind of comes into this range and then just spends months to a year there. So if you were a long-term bear or a long-term Bitcoin lover, that might be something you just keep in mind and say, okay, well, do I just end up hanging out inside of this range for a while? Maybe I dollar cost average or something like that into it, which just means people don't know. You just take like a certain amount and you say, okay, over the next X period of time, I'm going to average into that. It's not really the way I trade. For me, what I would want to see is for us to come in there and then maybe we spend years in there. So then maybe inside there, we have little different patterns we can play off of. But as we start to turn back up and as kind of the uptrend is developed, then we can push up from there. So until then, like I'm gonna look through them. I'm gonna go through the different cryptos every night, like I always do. All of these symbols you see me scan, I do this every night and sometimes twice a night. But I don't know if there's going to be anything. Oh, go all in, Luna. I really don't think there'll be anything that I'll be super interested in until I see from everything. If I'm bottom picking, I always just want to see a higher low. I want a higher low in which to kind of play off of to show me that buyers stepped in at a higher price, right? And that might happen all the way up here. Might happen all the way down there. So it is what it is, right? But until then, that's what I want to see, right? And I don't care what it is. I trade Dogecoin, I'll trade whatever except Luna. This ape coin, same thing, right? I want to see a higher low. And for the people who've been, not to kind of toot my own horn too much, but I had been saying this all this time in through ARC. It's just wait to make sure that there's some sort of higher low to play off of. And same with all of these other things. I was just hanging out kind of in this area. So to me, it's no different for Bitcoin. For an uptrend to happen, an uptrend has to start, which is a series of lower highs. So unless I find something that's holding on really, really well, then I'll take trades off of that. But it needs to be, substantially holding up greater than the market. And that's where I'll kind of put my cash in to start playing, as I go with relative strength regardless of the interests. But yeah, there's really not too much there. So, my crypto stuff has been really, really short on the website over the last bit. And it's not me being lazy. It's more just there's nothing to do, right? If there's nothing to do, there's nothing to do. So if you have cash in a crypto account, you just kind of stay in that crypto account. You just leave it in cash or start trading it. Make short-term trades until you see a reason to get long. But kind of a choppy week for UUP. So UUP for me is just looking at the dollar index. So it's the dollar versus a series of securities. So the dollar versus yen, pound, euro, CAD, all of those. I'm actually looking because I'm in a Forex trade right now that just opened and started. Well, I guess it opened like an hour ago, but it's just starting to kind of go crazy now. Really nothing to see here on the weekly chart, just an inside week. So now that this is starting to chill out, we can start to look for relative strength and things in the currency world, which is good because I've had to kind of stay out except for my short-term trading, which I just do kind of in conjunction with my day trading. But, still inside this range. I don't know if this is just going to end up being a double top or some sort of topping pattern, or if we're just going to base around in here for a while before we move higher. But really no reason to get bearish on the dollar with kind of the strength that's been going on here. So before, what was happening is the dollar was ripping so much, I wasn't even doing a lot of analysis because anything associated in the dollar just ends up being just being weak, right? So that when the dollar is strong, it's just going to rip everything off with it. So now we can do some analysis. So I wonder if this is just going to be another Aussie yen bull flag. And for the people following along, so far on a dollar basis, Aussie yen of all things this year has been my best trade. And that was back in actually through here. Took a breakout right in this area and just, it was an absolute rocket ship. And the reason that it was the dollar, in a dollar's terms, my best trade is just because I was able to pick so much up there with a stop just that tight. So, when you get those crazy R trades that are, 10 times, I think this was like 35 R or something insane like that by the end of it. So could it continue? Like, certainly. There's nothing stopping that from being a bull flag in the Aussie yen. This Aussie dollar, right? Because if it'd be kind of playing, this is where my head just starts to break when it's like Aussie yen, Aussie dollar, this kind of stuff. But we have this huge area on Aussie dollar right here that's resistant. So the only thing I'm really watching, I took a trend line break. That would have been this one that I've been talking about in the stream. That worked out great. I got out most, and then most as we kind of came into this level, and then I got out the rest on the bounce. The next thing I'm just watching for is just kind of an anchored view app from here and see if we bounce into this range and then fail again. So that's going to take a couple days to happen. But until then, there's nothing really I am looking at on Aussie dollar. Aussie dollar, again, is the same as CAD, where it's going to be based off of a lot of chop and slop. I've been trading some of this Euro GDP just against this level on the shorter time frame for scalps. And it's not a bad little scalping instrument, but they're just that. Like, you're in and out in, for me, scalping in Forex is like 2-3 hours. You're just in here and then kind of get out as well. Same kind of thing, right? It's, if you look at anything denoted in US dollars, it's kind of like the whole rant I just gave about Bitcoin, right? When, I've been taking these shorts the whole time, just trading in the direction of this trend after this kind of giant rounded top here, which is the opposite of, right, this giant rounded bottom on UUP, which is why we looked at this earlier. So as long as we've been uptrend, I've been looking to short AUD, JPY, and Euro USD, and all of these things. So could this be a double bottom? Yes, we've got a little bit of some anchored VWAP action in this area. So might be worthwhile to look to see if we get another breakdown on the euro. It's just one of these things that keep playing that trend until it stops. Is kind of the way I'm thinking about it. Pound yen. This is one that I've just added to the list last week. I had some great trades on it. I had a long in through here, and that's what I'm looking at on the other end here. I'm actually long. If we go in on the interim charts, I bought right in that area, that breakout right there on pound yen. So I'm up a little bit on it. My stop's still just kind of in this area. So I generally don't do and like publish analysis too much on stuff that I'm in. So I'm just basically looking to see if this top here gets broken over the next little bit. So again, my stop's just kind of in this area, and I used a lower time frame to get in just to see if this is going to be a swing low before we break out higher here. Which, if this is happening on pound yen, then that probably means my Aussie yen is resolving the upside too. I don't think I would take in on both of those positions. I'd probably just pick one, and because I'm already in this one on a lower time frame, it might be the way to go. Again, for that to happen, we're probably going to see pound dollar bounce as well. But in the meantime, right, I think we just still have to play this until we can kind of recuperate even this level right here on pound dollar. That might mean that there's some bear flag or some bear trap action going on down here. Maybe. Who knows? Again, it's so weird. I try not to think about, I don't know if anyone else trades Forex. I try not to think about all like the cross, like if I'm bullish pound yen, but then bearish pound dollar, does that mean I'm bullish dollar yen and like all of this? I just look at the charts and I try to trade them on their own merits. And just try not to take anything that's got the same numerator or denominator in it. So Aussie CAD, of all the other things, as the dollar was doing well, this is the only one that didn't break with, we were talking, the euro and pound and even Aussie for a bit. And it's just because Canadian dollar is such an oil play that this is, it's all going to move based on oil. But this 129 area has just been insanely important for a very long time, right? It broke this and just shattered back down. If this is going to hold and move higher, right, you probably is going to be the same thing as I just talked about Aussie dollar. I hope people aren't getting as confused as I think I am. But this is kind of going to just be the opposite trade, right? So how I was talking that this one's going to push down. If it pushes down, I'll probably take a trade. That's pretty much exactly the same trade as taking this to the upside. And it's just because Australian dollar and Canadian dollar are both, they're both petrodollars, right? So they both work kind of on what oil is doing. So they both kind of move sometimes in tandem. Aussie yen, dollar yen. Just the yen's shit. It's just a bad currency. Like, it's just look at all of the right. You denote anything in yen right now, and it's tanking, right? So right. This is going to be the same as I've got kind of the trade going right now. So I'm either right on all of these positions or I'm wrong on all of these positions. Probably in this one. Again, I do have this one in my prop firm, so it is fairly large. So it was meant as a day trade, but sometimes when I get good prices, I zoom out to a higher time frame, and if I'm like, okay, that was a really good price I got, maybe we shoot for the fence with this one a little bit, which would make it another like 20R type of trade. JC says he thinks the US dollar needs to do poorly typically for stocks to rally more or any merit. Yeah, I think there's some merit there. So let's go out here. So this is Trade Ideas. What you saw before is TrendSpider. I use TrendSpider for my FX positions and my crypto positions because Trade Ideas doesn't have those, but I got to turn symbol linking off. Trade is where I kind of manage all my trades and do all my scanning. If there's any the strat guys out there, we're going to be building some of that in. I found somebody to kind of let me into the community, I guess, and so we're going to be working with them, and we're going to be building in some really cool stuff. Go to week. So yeah, so you can always do an analysis like this to see how accurate something like that is. But right, we saw the dollar. You see how the crosshairs link up here, right? You see the dollar ramp up through here and the sideways action that happened in the SPY, right? And then the dollar sells off a bit and we see the SPY go up, right? And then the dollar rockets a bit and right? So it's a pretty known relationship, right? SPY goes up. It's not 1-to-1 like anything, but it's not like one really leads the other. So I get what he's saying. I don't think there's really much merit to, for me anyway, in the way I trade, for me looking at that too much, because I don't think one will precede the other. I think it will happen at the same time. You'll have the dollar fall apart and the market rally, or vice versa. And it's just one of those things where what JC tries to do a lot of, and I think it's cool. And for his more institutional clients, it's how you have to do, because it's a little bit more anticipatory than what I do. But what he does a lot of is basically tries to figure out how the whole market links together, right? Where he tries to look at, okay, if the dollar does this, then that means, right? It's the concept I talk about all the time, in which money isn't created or destroyed, right? It flows into different things, right? It's the whole concept of relative strength and market rotation, right? So everything flows into different things. So, the reason that the markets were rocketing post pandemic and all this stuff is just the concept of TINA, which is just there is no other alternative. You can't. Where am I going to put my money as a large institution? Because again, you got to remember, a lot of large pension funds and all of these things, they are forced by law to be X amount deployed, right? Usually like 90 something percent deployed. So they just can't go to cash. So it's where, right, they may be able to go into cash equivalents, but like, where are you going to go if bonds are paying you nothing and none of these commodities were doing anything at the time? Where do you go? So as interest rates get raised, then it's like, okay, now there are all other alternatives. But as the market falls, what happens when a market falls? People sell things. So a lot of people don't like, that's converting something to a dollar. It's the reason, that I don't think Forex is as scary as a lot of people think it should be. But right? You're not some. You can think of it as buying or selling something, and that's true, but it's really converting dollars for this or dollars for that. So if enough people sell stuff, they're essentially buying dollars, and that will cause a dollar to go up. And then if people are buying things, they're removing dollars or selling dollars from the system. So, just if you think about it like that, you're like, oh, that's not really much. That's not really that crazy. Now that so a lot of people go, oh yeah, right. It just makes sense that it kind of switches around. I realize there are products, but is this realistic to try and trade the VIX since it cannot be traded directly since the products are indirect futures? I worry about all VIX products, to be honest, because a lot of them have got destroyed. But you got to remember what the VIX is, right? Which is puts like options on futures, right? So could there be a world where all the VIX products implode? Because you're right, they're not like real quote unquote products, but there would still be at a very high level arbitrage, which is how all of these products exist, right? There's nothing physically keeping GLD pegged to the price of gold other than the fact that they release their holdings, and their holdings are futures, and you could take trades like that, right? So, you could, in theory, go through and say, hey, I'm going to, there's nothing that pegs that gold ETF to the dollar. So if nobody was paying attention, or it could deviate, but because you can short one and buy the other, it will always remain in line just because of arbitrage traders. So the argument, and I've heard this made before a few times, is that you can't trade this other side. So you've got this one side that says it's pegged to this side, but because you can't trade it, but we can't trade it, but you can, because it kind of is the amount of options outstanding. So in theory, you could take the other side of some of those options trades, but I don't like the concept of trading the VIX period for that reason. Whereas like, that gold ETF will always be pegged, and I'm confident in that. If you want to buy gold ETF, right? As long as there's no like accounting fraud, that will always be pegged. But in some sort of insane circumstance, you could definitely volatility ETFs could blow up, and they have before. So it's not like it's a new thing at all. And then if you look at these things, right, they're just not designed to be held long term. They are decaying assets by design. Now, that doesn't mean in my mind that the VIX is useless. Day trading the VIX, I don't see there's any problem with that. Or even short-term trading as a, 2 or 3 day trade. That's fine. I think there is that risk of imploding. With something that's not leveraged, like I think the one that went bankrupt the other year ago was leverage. So definitely no leverage ones, but like the VXX, I think you're pretty safe there. But yeah, if you want to, for example, and a lot of people do, a lot of big fund managers do, because they'd rather, if they think there's a 2 or 3 day drop coming, they'd rather purchase a product that is like this, that's going to make money off it, and try to take that quick trade. So that happens all the time. And then day trading the VIX, I know there's some people who just exclusively, that's all they trade. For me, I generally just use it as a hedge. I'll mention sometimes with my kind of retirement portfolio type of thing, but not very much. Usually for me, it's like something I look at to see if a sell-off, for example, is happening with the VIX declining or the VIX not moving. Sometimes you can say, okay, well, people aren't terrified with that, which is what it's meant to be, is this fear and greed indicator that's actually traded. But yeah, if you're going to trade it 1 to 2 day max, I see you have here, I don't think there's anything wrong with that. But just know that there is that risk that exists somewhere, and it might be like a 0.0001%. I'm not going to think it's a crazy percentage risk. So okay, so let us get right in to the actual markets. So we've got our thoughts on Forex, we got our thoughts on crypto, and now we got to go into the belly of the beast here. So I hate to be the party pooper. Oops. Weird. I hate to be the party pooper on this one, but right during this last bounce, I was telling everybody to chill out. We're still in a downtrend, and I'm just gonna do the same kind of nerdish, calming action with this as well, where we're still in a downtrend, right? We have to, as soon as kind of this area was taken out right here, we're in downtrend mode. So we have to continue to live as if we're in downtrend mode, right? We recently kind of came back into this low right here. That kind of has me a little bit nervous for the overall market. Let's actually just start. I do want to see what's the anchored view at from that high as high. So we broke that. So that's encouraging, I guess. But yeah, we're in this downtrend. So until I see a higher low, just like I said in Bitcoin, I'm not going to be super excited about stuff. I'm still going to do what I do, which is to trade relative strength. But, as a Brian Shannon would say, guilty until proven innocent, right? All right, still just a bounce in a downtrend. That's all it is. So, again, sorry, I hate to be the party pooper, but that's just the way it is. Someday, we're gonna get, that could be the low. I'm not saying it's not, and that's not the argument I take. I don't go, oh, there's no way this thing's gonna bounce. That's not the low. For me, it's more, I'm not going to participate until I see XYZ, right? I'm very an if-then type of trader. So, right, two options, well, a myriad of options, but two logical options is that we have these lows right here, meeting these highs right there. We could just turn around right there and continue to make lower lows. That's kind of the Max Payne theory, right? Maybe we kind of chop around for a bit and then push higher. And that would have our higher lows or a higher low in right there. We could pull back from here, but hold above that low and then bounce. But in pretty much all of those cases, we're going to get a chance. Now, could it just rip from here and hit new all-time highs without giving us a higher low to watch? Yeah, it could. I'm not really afraid of that because it's rare, but it certainly could happen. But that's fine because I will be just looking for relative strength all the same. So I got a question from the trading room here. Why not trade relative weakness in a bear market? So I have tested this. I've actually tested the reverse of TI strength, which is a long-only algorithm that outperforms the market. It's actually up this year as a long-only algorithm as opposed to down, which I'm very excited about. But I've actually reversed it and I've tested it. The difference that I've noticed is that, and we all kind of know this intuitively, that when stocks are in uptrends, they kind of go like this. They're long, persistent uptrends. When stocks, for example, just tank, they do so really, really fast. So by the time something's relatively weak, to everything else. Um, Generally speaking, it's probably time to bounce. It's just the concept that, you can notice, hey, this thing's in a nice strong uptrend here, and still probably have a chance to get into a decent little uptrend. I've noticed anyway that when something tanks and tanks further than everything else, and you kind of see this, you're by the time it's selling, you're kind of a little bit too late to the party. So for me personally, and there's actually a trader saying they just call it being short in the hole. So I'm not saying that you couldn't just say, hey, ARC, for example, is relatively weak to the market. You just can't trade it in the same way as saying energy is relatively strong to the market. And the reason is because you need to know that stocks on the way up and stocks on the way down trade differently. So you could, for example, the way I would suggest looking at it if you wanted to build a strategy is say, hey, this is relatively weak. It's in a downtrend. And then try to look for some sort of bounce into downtrends to short into. You'll just notice that, right, something breaks an all-time low and then it just bounces up in your face for 4 or 5 days, right? These things break lows for a little bit and then bounce. There's just a lot more of this type of action where when things break down, they're a lot messier because they move just in that direction faster. So the snapbacks are going to be harder as well. So again, not saying that you can't do it. Again, I find swinging short a little bit dangerous just because it's, you have that insane upside risk on things. So it skews your risk reward a little bit, right? When I buy a stock, I can very easily have it double. Even, look at ARC, for example, for this thing in downtrends, right? At some point, and it might actually be around here, at some point when this thing puts in a higher low and reverses, couldn't shock me. Like I wouldn't be shocked at all if it gets up to here, which is in your mid 70s. So if you're looking at kind of the stuff on percentage bases, I usually say bounce plays are going to be your best plays, simply because, again, that percentage gain or loss, like, that wouldn't quite be a double, but it'd be a near double in this. If you were looking to short it here, could ARC gap up to that area? Well, depending on the components, that kind of stuff. Yes, and that would be almost a complete loss in that position. So, there is that asymmetric bend, but again, you can build a trading plan for anything. I've just found myself that I trade it long and short forever, and then I just looked at it, and the shorts were always dragging down my positions. So for me, it's better just to stay in cash. Yeah, ARC's not looking horrible. Actually, Brent, I know you do a lot of your own stuff, which I love, picking my brain and whatever, but doing a lot of your own analysis and not leaning super heavily on mine. But KWeb, we've got a couple on the watch list from KWeb, simply because it's done potentially the higher low thing. So I did Trader TV 2 on Friday, if anyone was able to attend. And let's actually move this over, where I kind of sorted by position in 20-day range, and KWeb right here is the top chart. So with Trade Ideas, we can sort by all kinds of things. So I just sorted and said, hey, show me of the ETFs I watch, what's the highest in the 20-day range. And it's KWeb, followed by ARC. So, right, I'm not saying that a lot of people, when they hear me say I'm a relative strength trader, they think it means that I'll only buy stuff that's like hitting new all-time highs or something. It's not not the way it works. It's what you got to do is you got to look at your time frame. So my time frame is in the couple weeks to the couple months. So this to me, as a change in 20-day range, is high. So KWeb looks very interesting to me. And it's funny, I noticed before I even noticed that KWeb was doing well, I noticed, I don't know if it's still the case, but there was a lot of Chinese names in TI strength, which is that relative strength algorithm that I made that I was talking about. A lot, actually. So I don't know if it's like that now. No, I think they got kind of kicked off a bit. But yeah, there was a couple days where they were really, really hard up. So we can look at what we had for the watch list. Let me make sure. Oh, while I'm here. So this is forexfactory.com. I go here all the time. Not affiliated with these guys, but hit me up. I've been using your website for like 20 years. I feel like I almost, well, I was about to say I owe you, but I mention you all the time. So hopefully that makes us even. So Monday, nothing really interesting. Tuesday, consumer confidence before the bell. Wednesday, oh, good. JPOW rants about stuff. That's great. Thursday, PCE, so that's an inflation number. We're really looking for the inflation numbers for the big market movers. And PMI, so another. So Monday and Tuesday are probably going to be pretty lame. And then I say most, if you're planning out your week, Wednesday, Thursday, Friday is going to move as well. So let's go into the watch list. But yeah, so these were the China names that I had, Brett, that we were talking about. I don't know why this is doing this. Is it MacBook? Okay. Does that work now? Yeah, good. Is that just me, or is that just a Mac thing? With anyone else notice that with Trend Spider? However, and then the scroll wheel just ceases to work. But yeah, so LU. Essentially, we were watching this one holding up very well, putting in that kind of higher low potential in through here. There was VIPs as well. I'm actually in some VIPs, same kind of thing, potential higher low or rounded bottom, and just seeing how much stronger these were than the overall market. So those were the two China names that I had in there. Don't think I'm going to put any more right now. I think I'm kind of cool with how it is. Just keep checking on this pound yen position. It's just popping around. Good little base got a break out of. So let's actually go through some of these charts. That's what we're doing. Go through the different ETFs, which I have sorted by the position 20-day range. So I'll look at the top ones and leave everything else alone. Right, so we've got this area. If we can break this on KWeb, then we're looking interesting. So we're looking for a breakout like that. ARC is the same kind of thing. So like, for those who are new here, if there is anyone, again, I never know how many people are here watching. I don't generally trade the ETFs. We've been talking for a while about the ETFs simply because that's going to tell us where we're going on. So like, I'm not talking about ARC because I plan to trade ARC. I'm talking about ARC because if I see something like a Zoom or a Peloton or one of these, ARC to me is my shitty growth name ETF. So when I trade the individual names, I'm hopefully being pointed in the right direction when it comes to making sure that I'm, hey, if I'm interested in KWeb and then I see a name come through that's from China, I'm like, okay, now I'm a little bit more interested because I know we are in a relatively strong sector. And that's what has actually been saving me this year and making it actually a pretty decent year, because we got in some oil and gas when that was hot. We got in some utilities when that was hot. So maybe. I already tweeted this chart. And I think I've included this in another one. It was one of my funny tweets that no one likes when I try to attempt humor on Twitter. So XLV, pretty substantial bounce there in healthcare. This is actually interesting to me because now healthcare is relatively strong. So let's actually, instead of doing the weekly chart, this might be a better use of this lower chart. So I'm unlinking it. So now these are two separate symbols, and we'll put in the SPY. Or do we? No. I have on another virtual machine the two charts in one pane edition that Trade Ideas made. But I don't even know if I'm allowed to show that yet, so I won't. But yeah, so this lower chart is now the SPY. So you can kind of gauge how things are relatively strong or weak in comparison. So, we've barely not even gotten close to retaining this little area right here on the SPY, but the XLP is up a little bit above that. So not substantial, but a little bit relative strength going on there. And same with XLP, consumer staples. So V and P are both doing well. UUP, we were already talking about. Now we kind of get into the range of a little bit of relative strength as well, right? XLY, consumer discretionary, which is interesting because that's kind of your throwaway. But really nothing here is standing out enough that, except maybe insurance. So we were kind of watching, get out of here, this base here in insurance for a long time, and it broke down out of and then closed back above. So is that a potential bear trap in the insurance sector? Which, when NFTs and all of the Robin Hoods and all this stuff was going crazy, do you think a year later you'd be talking about bear traps in the insurance sector? I don't think so. But we go where the interest is, right? And this is the beauty of being relative strength and being trend traders, is that we go where the strength is, regardless of where that is, right? And we just keep hammering away. If it's going to be insurance, it's strong next. Great, we're in it. If it's going to be healthcare, it's great. We'll be in it. If it's going to be K-Web, then we'll be in that too. So XLU, this bounce right off this support right here is pretty wild. It's a lot of potential double bottom looks, which double bottom is just such a rare pattern for me to see successful. That is just shocking. Like, these things are just bouncing almost too perfectly in line with support. I know that sounds weird. It's like the cliche action movie, oh, it's too quiet in here, but things are just working a little bit too well in order for me to be super comfortable with everything. But again, this is like, if you go position in 20-day range, it's wheat at the lowest, right? This is why you've got to rotate. We were looking at food names and commodity names in here, and then it's why you got to have your exit plan. Both Mac and PC, you can set up workspaces. Okay, so that is our sector watch, and basically just saying that there's only a couple here that were interesting to me. ARC and KWeb are the ones that are the strongest. So I'm just going to stick with watching those and kind of ignore everything else. Right, so we have ARC here and we have KWeb. So watch these things going into next week. So we're going to do some scanning, but we could take a look at like Zoom, right? Is that a potential reverse head and shoulders here? Which, it's funny, I always say my higher low play, but I don't really mention that a higher low play is kind of the exact same, right? Because you had to have a downtrend and then you had your uptrend here and you pick some up there. So you're just basically playing a reverse head and shoulders, right? That's why it's important to know the idea behind the pattern as opposed to just being able to recite the pattern. Is essentially just, that's the idea behind the head and shoulders. You have a lower low, and then if you do this and you have a higher low, then that's your reverse head and shoulders. So who else? Hood. I think Hood's a Kathy name. Right? That thing's just absolutely trounced. Maybe you get, and these are the kind of things that I look for. When we were, I'm not tooting my own horn. There's a reason for this. But when XLU was right here, and I said, okay, this, it's basing up near highs. It was really relatively strong in this area. And then it kind of broke, and we had a wicked trade off that. When it was the same with oil, when it was relatively strong, I didn't get this guy right here, but I think I got a little bit of this guy in here, and then a little bit of this guy right here. It's because you can get these wicked moves even in these shitty markets that I still always kind of focus on the long side. It just requires incredible patience, and I do a lot more day trading in beaten up markets like this. A lot more day trading because I have more cash just sitting around, kind of waiting for moves to happen. So, right, say we are right, and I don't think I'm going to add this to the list, but I'll watch this. But say we're right on Zoom. Would it shock you if it's popped back to 200? I'd say you're never getting to 400 or 600 or anything like that again. But I don't think it would shock anyone if this thing kind of bounced, even in this area. And you're talking a 50, 60, 70% gain here. So it takes a lot of patience, but, people from the room, they'll tell you we were long a bunch of stuff right here. We were long a bunch of stuff right here. And I'm long a handful of things right now. Not insane, but quite a bit. So if we are going to get this sustained bounce, that's great. And we'll be selling on the way up. And if we roll back over, then we'll get trailing stopped out of the rest of that, and you'll wait again. For the people who are learning to trade right now, I think you've got the best time to learn to trade, because it's going to require that gut-wrenching patience in order to make it out alive. That if you don't have, it will wean you out pretty quickly. But when the markets become easy again, you guys will have such patience trained into you. This is where I think traders are made. The patience are getting your patience like super dialed in, where you're like, I don't have to take trades, right? What percentage typically my trailing stops? I use generally price action on trailing stops as well. So it's not so much just a percent amount. I think those are kind of lazy, so they don't really work very well. But it's more of UTHR is one that I'm in right now. We got involved in UTHR right in around here. Might have been the end of this day. I can't remember. Somewhere in this area. Just my favorite play of all time. Prior resistance acting as support. We got a nice bounce off that. So I sold a chunk into this prior high. And for now, I'm just using a bar by bar stop on the last third. But for me, I would always use price action. So, if I was in this stock and it did this and then started bouncing, my stop's going to kind of go in this area. And say we do a little bit of a pullback or create a base up in here, then right, my stop gets raised again. So I use it more less of just a generic type of trailing stop, right? Because 10% on one company could be nothing, right? One name could move 10% a day, and then another one could never move 10%. So it's just, making sure that you're sticking with kind of whatever makes the most sense, right? So I've got some requests, and we'll go through these while we are. Oh, what I wanted to do first, because I'm just a creature of habit. We have to go. So this was the watch list as of Friday. So I just want to clear out anything that I'm not interested in. So I'm going to leave this one. This one still looks interesting. I'm in some of this, but I'm still going to leave it because it looks interesting. HRB, it's probably time to take this off. I'm in some of this from kind of right in this area right here. I just don't think it's as good right here. Kellogg's. Did I buy Kellogg's on Friday? I can't remember. But this has to go off the list. It's bounced from that area pretty good. I don't think so. I don't want to log on to my brokerage account. I don't think so. I don't remember buying it, but I don't remember half of the things. LU, I'm going to leave. This is the kind of K-Web type play. LW broke out of that range that I want it, so I don't really think I'd buy it right here anymore. That one's looking great. And we'll get rid of that. SGML. I'll leave that one. That's from the new IPO scan, which I'm really liking. Okay, so leave the rest of that. That's fine. Okay, so Udemy. Yeah, it's Kathy would play. I think they're all going to move with ARC. As a nerd, I know no one comes to me for my fundamental analysis, and I will never trade off fundamental analysis. This company makes way more sense to me than like a Zoom or a Peloton. Just, we like to shoot the shit, right? Talk the story, right? Peloton's a bike with an iPad strapped on it. I use Apple Fitness from time to time. It's amazing, and it's integrated into all my Apple shit. So it's like, why would I ever? I've got a water rower that you guys can see right there, and I can go to like rowing classes and shit. It's just way better. Zoom is just a video sharing app that anyone could copy. Udemy, again, as a gaming nerd, for people who don't know, Udemy is like the software, not Udemy, Unity is the software in which you build games on top of. So they're kind of like the pitch and forks for the gaming world. So again, no one comes to me for and I don't, like, I'll have a story, but then it's also going to be a trade, right? It's because I don't know shit. I don't know the valuation of it. If that means, my analysis could be right, but $13 billion for a market cap could still be way too much. I don't know any of that stuff, but up a little bit too much in a row. So maybe if you got like a shallower pullback in then maybe you could take it. But the beauty of these plays. So the thing about revision to the mean plays, which is we're waiting for a trend change and we're trading relative strength. But since everything is beaten up, right, we're going to be buying stuff that's beaten up. The thing I don't like about them is because you're trading with the trend for our time frame technically, but the overall trend of these things are obviously negative. What I like about it is that exactly where you're wrong, right? If you are ever holding on Udemy on a close under this candle right here, you're an insane person, right? So, right, you get to easily, there should be no question in your mind, because if we close below this candle right here and then we start trading back up through it, you can buy it again, right? You can just So who cares? You know exactly where you're wrong. That's what I like about it. But you're up 20% here in a row. I'd like to see a pause or a pullback or something. Snap, same kind of thing. Right, this one doesn't have the higher low, so this one I would say looks worse than Udemy. Not Udemy, Unity. Udemy is another stock that I think I've been trading. All right, so I always just love that you can do this with trade ideas, right? This comparison, and then again, watch the crosshairs, right? So, right, Udemy has this low, Unity has this low right here, and then this low is higher. And then on Snap, right, that's got that low, and then a significantly lower low. Right, so Square, same thing. So if we're comparing, we're looking, we think ARK, which is comprised of the junky growth stocks, may be in for a bounce because it's setting up a higher low. And over the last 20 days, it's been relatively strong to the SPY, right? So that's our big thesis, right? And then our lower thesis under that, and this is how top-down traders work, which is like me, well, one higher. So we got the S&P 500. We're bouncing. We could continue to bounce. ARK, relative strength to the overall market. Put in a higher low and maybe basing to bounce higher. And then when we go into that, we say, okay, well, as we're doing our scanning, when we're running into these ARK names, which ones are the strongest again, right? So then you've got the SPY, which is what you're relative to. And then we said, okay, ARK is showing relative strength. And then what with inside ARK, not necessarily an ARK holding, but an ARKian stock is going to be higher. So that's why you see me here comparing these ones. And again, I don't want to be crapping on the stuff that you gave me, but this is why I'm comparing these to Udemy, right? Whereas Udemy was able to hold that low and put in a higher low, these ones weren't. So if I'm interested in getting long stuff because the market's good and I'm interested in ARK, then I want to be buying the strongest inside that thing. Because if ARK goes up, everything will go up, right? Everything within ARK will go up. So within that, my bet is just that the ones that's relatively strong will be the ones to play. So Udemy, for me, would be the winner, but it's just moved up a little bit too fast, right? Yeah, and then you mentioned coin. I would do coin with Bitcoin. I wouldn't necessarily do coin with ARK, although it's kind of both. I think if Bitcoin tanks and ARK rockets, Coinbase will still sell off. And right, but this one looks a little bit better technically because we've got this low here, and you can see it line up with this low here. Maybe I can do a better job of zooming, right? Yeah, so this low here, which is that low there, and then you can see it's putting in the same higher low in through here than this one is. So you're on the right road there. It's just interesting that right, you have some relative strength here with the actual price of Bitcoin. So I don't know. Maybe it's time for a little Coinbase. Right? And then again with these things, I don't want to like insinuate that this is going to happen on any of them. But there's a double of your money right there. So again, I'm totally okay missing, 10% down move and then base and then 10% down move. That when these things, and we made some money this year in other relative strength places, when these things reverse, they'll put in some sort of higher low or relative strength like they are. And, if we get something, and it may take till Powell starts talking that makes them think that cheap money is going to come back. Maybe that's what happens there. So I don't know. I'm kind of talked into Coinbase almost. Yeah. What? So that's 65 and then 50. And then Unity will go on a list, and if I get a pullback, then I'll be interested in that one. Okay, so let's go back to the SPY, and let's do some scanning. So I have 9 things on the list right now. 15 is always my cap. My favorite scan in this new Market Explorer tool I have is this one here, just called Recent IPO, sorted in position at IPO high. So what it's doing right now is it's scanned the entire market, and it's taken any stock that is an IPO, which, hello? Okay. Don't know what happened to that symbol. So it takes all of these, and it sorts them by all of the stocks that are in the high end of their IPO range. The reason I look for this is actually came from a tweet from Joseph Fahmy, who basically just said this is something he does in bear markets because it is rarely the stocks that got you into the bear market that get you out, right? So when the tech bubble exploded, it wasn't tech names that got us out of that bear market. And when the financial markets collapsed, it wasn't bank and financial names that pulled us out of that bear market. So I don't think that it's going to be the ARK names that are going to take us out of this market. So essentially what I'm doing is I am just looking for different names that are just, this is where it's a list of IPOs, and it's a list of IPOs that are doing very well. So the goal is just to find a kind of list of IPOs that will be something that I'm interested in. So like anything, I'm taking the relative strength approach to it. Right? So the relative strength approach is show me all the IPOs and show me the ones that are hanging out near the top end of that range. So long story short, that's what the scan is. Oh yeah, I meant to add this to my ETF list. PFIX. I was reading a little bit about it, and it seems that send to symbol list ETF. There we go. It just tries to invest in things so that basically it goes up when interest rates go up. It's interesting vehicle right now. And if this is actually tracking interest rates, which I don't look at very much, it seems to be putting in a little cup and handle here. So that's going to be slightly worrisome, but I want to see enough price action for something to happen. But this GTX may be interesting. Oh, yeah. So it did something, some sort of restructure or a different stock or something. So I think the IPO is actually right here. What happens if I look at this in TrendSpider? Yeah, some sort of corporate action happened there. But this is interesting. So we've got this kind of congestion at the top end of this range right here. So this is something I'll keep an eye on. If we break out of that range, that might be interesting because that would be that range too. And it must have done some sort of name change restructuring. Oh, PFIX is basically a 20-year treasury short. Okay, so it's not tracking interest rates. It's just gonna, that makes sense. MCIX, I'm in some MCIX from right here. From this scan, I kind of took it on the fly. I do that very rarely. I got out a little bit on Friday when it kind of failed to break this high and came right back in. So I'm still in some of this. It's got earnings coming up that I've got to watch as well. But I like to look at the chart still. If it can kind of close above 8, that might be, I may add back in on that one. But I'm not going to add to the list because I'm already in it. I don't like doing that. So yeah, the cool thing about if you're a story person scanning these IPOs like this is you're kind of at the same time trying to figure out what the next story will be. You know, again, it was internet stocks and then financials and then growth stocks, and it'll be something else next time. So I have some of this new scale, just trying to see if it was going to break this prior high that it had right here. I took some at this guy at 1050 ish. Just going to see if it was pushing higher. My worst case stop will be under this area right here. So far, not looking great, but that's on the list still as well. But yeah, we're trying to see what's going to be the next thing. What's going to be the next thing that gets everyone super excited and then breaks the market, right? Because you think about it, if you go back to Zoom and you go back, right, this is the first candle for Zoom, right? We have 2019, and then the pandemic is right in this area right here. So we are in a bear market in this zone right here. Man, if you had gotten Zoom as your, I'm not going to buy the stocks that get me into it, I'm going to buy the stocks that get me out mantra, you would have had just a wicked position there. SGML is on the list already. I just really like the look of this one if it can get going and close. It hasn't been able to really close in this 18 area other than this one candle right here. So lithium play out of Canada, and again, an IPO. So it's got, thing about buying something like Zoom is, you know, you got, or even Udemy or Unity or any of these, you know, you've got all these bag holders above you. If you're buying an IPO that's at or near all-time highs, you don't have any bag holders. You don't have anyone that's basically saying, oh, if we bounce a bit, I'm going to sell. Except CHK. So yeah, you will also get, just FYI, you will also get de-SPACed companies and anything that's like come back at a bankruptcy or anything like that. Just because the way I did the calculation was saying if you don't have a 400 period moving average, then so there's HTZ, then I'm going to include you in the calculation. And now we're getting into the more lower end. I think Barry was playing this PEV earlier in the week, like a psychopath. So yeah, I'll basically scan this until I get into that 50% area, things that are below the middle. So that this middle and rate, this filter right here that you see that's showing that position and range is basically saying, right, if the top is 100% and the bottom 0, where is it in this range? So as soon as we start getting stuff that's in the lower end of the range is where I kind of kill it. Because then you're getting stuff that's, probably under even the IPO price. And then you start getting into the, oh, there may be bag holders, right? And you never want to. Oh, there's SARK. So then this other IPO scan that we've built in here is actually stocks between or close to their IPO price. So they're within one average true range of their IPO price. So this AECLX that was on the other one too, there's the IPO price. So this is actually kind of interesting. What's the volume? Right, so here's your IPO price. We broke it. We came back down to test it, and now we're pushing off it again. Biological product, right? So that's what this one is. Just anything that's in that close end range of their IPO price going to show up in the scan. And then I have a couple more that I go through, and then it will be, again, at any time, if anyone has any questions or any symbols they want me to look at or anything, go right ahead. Yeah, and then for, again, the Statsedge trading people, I will break and put all that into your blog post for you and kind of let you know what's going on there. Check out. I'm just looking at my pound yen trade over there. It's not really moving. This one's kind of interesting. Whatever happened here at earnings, I don't care. But we've bounced up, and now we're just kind of putting in this sideways action. It's a recent IPO. So that's your IPO price. So you're above that now. So this one's interesting. So what's this? So you could just do like 14.12, right? Yeah. We're going to add that one to the list. Right, a very, very simple play. Right, we had earnings. That was good. We, other than this high right here, we don't really have much in our way. So we're just saying if we can get over 14, we're interested. Our stop's under 12, and see if this takes a run here at highs. So we'll just go 14.12, easy enough. I like that. It's in the semiconductor space. What is SMH? SMH. Dyslexia, I'm telling you. Oh, so it's definitely relatively strong to the semiconductor index. Oh, yeah. Okay. So I like that one. What does darts do? Yeah. Clinical stage oncology. Cancer cures. That's a scary one, but it's interesting. So again, we got our IPO price here. We know these can act as, areas of support resistance. When we broke the IPO price here, you can see how well we sold and we came back to it. And then it's putting in this little flag. It's 300,000 shares. Market cap's a little under $1 billion. So it's not like it's a penny stock or anything. I just don't like some of these days. It just looks a little bit janky of a chart, but I'm going to just make that a price alert there. There's some stuff that I kind of don't like putting on the list if they're like lower volume or things like that. So got a question. Do you have any biotech rules? I don't short them. That's kind of the main rule. But no, sometimes like if they really worry me, I'll go in at like half risk. I'll take half my normal size or something, just knowing, like, that's whatever that company is. They're trying to cure cancer. So, if I'm right and news follows trend, and that trend's going to continue, and the news is going to follow, and they end up doing, a great cancer treatment, then, I'll be, of course, happy. But it's just one of those things where you've got way more volatility. They can come out the other way and say, no, this one pill doesn't work, kind of thing. So you just got to be careful. And for me, when I say be careful, the only thing you can do to be careful with anything is to lower size. This PCRT is kind of interesting as well. Just has to get over this 40. So I'm going to put in a price alert here. Just let me know if it kind of gets in this area to add it back to my list, because it is kind of a cup and a handle look going on. Right, and then you got this big sideways action, but you just kind of have to see it more in this area hanging out before you can get super excited. That's our IPO look. That list is going to get tiresome, I think. At some point it's going to just continue to be the same kind of things. So now there's the scan I actually do in TrendSpider, because I can't do it in Trade Ideas yet. And this is just one that's looking for pullbacks and kind of stronger stocks. They're strong as in at least in an uptrend for our time frame, and then looking for pullbacks in through that. Basically just doing it with an anchored view app, saying, hey, this has been hanging under the anchored view app from this high for an extended period of time. So what is LU? Nuclear Fuel Services. I just kind of like, right? It's my potential higher low play. There, I've got a great place to get involved. I can get involved here with a stop right here. And if we end up breaking into new highs, that becomes a multiple R trade very, very quickly. Yeah, so what's that? 30, 25? Now, there's a lot of stuff going on the list here, but it's important to note that we have just bounced a lot on the SPY. So it certainly could be getting to the point where I don't want to add too much more to the list, simply because I don't want to have, 30, 40 trades going on. Just running the same scan through a different list. No. Okay. So yeah, so now we'll do the bull flag scanner here, Trade Ideas. And this is just looking for just bull flags, as simple as it is. That ATHM looks good. It's another China play. So I just don't know if I want to add any of those. It'd have to be very, very appealing to add one of those to my list, I think. Just because I wouldn't want like a third of my portfolio to be Chinese names, because we know what they are capable with just tanking their market. Well, that's good. I stopped and I looked at EVLV because it looked good and I own some. So even though I'm down in it, maybe that's a good sign. IQ is China. JD is China, right? A lot of these. It's funny how the markets work, right? PBTS is China, right? How this all works, where these are completely different scans that are looking for completely different things, and they're finding a lot of the same things as, the careful top down analysis of all this careful stuff. You find the same thing from just looking at the, like, K-Web is in the bull flag scanner. Right. So I didn't need to go through this, top down sorting of what's the strongest kind of a name. And SKLZ is in TI strength, or was last week. I can't remember. And this one looks great if it can get over this. And again, it all kind of just goes full circle. Yeah, another China name. So it doesn't mean it's necessarily true, but it does look like we're about to see some sort of a push in China. Yeah, another Hong Kong name. Inverse Kramer better than inverse Kathy. Yeah, it's kind of hard to be wrong as much as poor Kramer is. But at least Kathy, you can see every day how wrong she's been. Right? Again, I've said it, but I think it is important to note that I am not saying that this is the bottom of an arc and that arc is going to go back up to triple in value to its highs. It's not at all what I'm saying. And same with K-Web. Right? I'm not saying all the trust for investing in China is back and this thing's going to go from 33 to 100 and also triple in value. Like, that's not what we're after as traders, right? What I'm trying to say is I think that there's a chance that maybe you may get some of these beaten down China names that have been putting in this higher low play that I trade, maybe starting to go a bit, right? Give me from 6 to 8, and I'm a happy camper. Like, I'm not saying this thing's going back to 20, right? It's very important, I guess, just to say, okay, so someone watching this video 2 months from now when ARK in China's at a new low saying, good work, right? I don't call bottoms, don't call tops. I trade trends. So if we're going to get, if this is a low and then we put in our higher low, right, and say we do this another 2 or 3 times, I'm happy. Then I don't care what it does. I can just do that again. Which, if you look at these longer trends, probably may happen, right? Nothing stopping ARK from breaking 50 here. Test going up. It's got a long way to go to even this prior high right here. If it gets there and then fails, you can have a wicked trade in an overall downtrend. My whole point is wait for relative strength. Like, this was my key to start looking at these, is that these are the strongest. These are the strongest ETFs right here. I'm actually going to remove that now that I know that that is what that is. Right? So just trading relative strength, being real basic about it. So that is the list I think I'm going to stick with. I've been through all my scans here. Let me move that over. We'll do a once over on it. And then if there are no more questions, I will be put together all this stuff for the Statsedge Pro members and I'll be chatting with you guys soon. So AYPX is interesting there. Just shot up for some probably news related reason, and now is coiling. So that might be the bottom of that. If this thing starts to push higher, that would again be right. This thing was in a downtrend forever. That would be my higher low play. Coin, that's exactly what we're looking for. This thing sold off. It's putting in a little bit of a higher low. I think if it gets kind of above that area, what do we have for coin? 65.50. CRDO had earnings in through here that gapped us up, and now we're just kind of chopping sideways. I really like these types of plays where I don't have to do any fundamental analysis. I don't even know what these guys do, but they are relatively strong to the SMH, and they're something to do with semiconductors. And again, just a nice kind of a pattern in here that I think that if it resolves higher, you've got, again, very simple trend play, EVLV, leaving on there. I like it. I'm in it. LEU is another good one. SGML, watching that. You can see this SHLS is the same kind of thing as that other one that I was just talking about. Something good happened in through here, probably earnings. And now if it's holding that gap and it's going to push higher, it's got this nice rounded bottom pattern going on here. SMR was basically just looking at this as just kind of a potential big rounded bottom on an IPO. So I was trying to see if it could get above this area right there. So I picked some up in through here. My stop's like going to be down here. So I probably wouldn't even give it that far. I'd probably be out more like that. See if this thing reverses. If not, it's fine. STKL, this is one from TI Strength. Looks good. Again, don't need to know what happened here, but the market liked it. Now we're chopping sideways. And that's your potential kind of cup and handle type look. Last but not least, VIPS. This is from the K-Web play as well. Big rounded bottom, big area of support and resistance right here, and made above it right there. Okay, guys, that's going to be it for me. I appreciate everyone coming and hanging out. If you want to hit a like button on your way out, that'd be appreciated. And come on, hang out on Statsedge Trading. Just see what we're all about. And we have a good, there's a free trading course there as well. If you want to just, for free, it's like 36 lessons long. So come hang out. It'll be fun. Good stream. Thanks, Brett. Appreciate it. Okay, guys. I went over the Forex Factory thing, but I did it quick. Basically, there's no real economic news or anything until Thursday. So Monday, Tuesday might be slow. So, if that's the case, don't push it. And I will see you guys later.